Erika,
Good morning.
how are you?
I'm doing great. How are you?
Excited?
I'm a little out of my comfort zone, but excited.
It'll be fine. It'll be fine. So this is Eddie, the insurance guy. We're here with Erika Maldonado. We're going to be talking loans today.
Sounds exciting, right?
So Erika, tell us, for those that don't know Erika Maldonado, tell us a little bit about Erika.
Erika Maldonado. I've been in the mortgage industry since 2009. How many years is that? 13 going on 14 now?
Yeah, it's like 15
Can't
years.
do math, right? I have an amazing, wonderful son. He is 22 now.
Wow.
And my entire life and everything I do, it's like for him. And other than mortgages, my son and going to the gym, I love doing cycle classes, spin, indoor cycling. That's me.
So how did you get started in the mortgage business?
I was tricked into it. No, no. Great question. Back in 2009, I was a manager at a shoe store.
Wait, so 2009, this is like right after the crash?
Yeah.
Okay.
Yeah, but again, when somebody tells you it's a great idea, you go for it. So back in 2009, I was working at Famous Footwear, which is a shoe store.
Okay.
And I was a manager there, hating the weekends and nights and working holidays because I had my son.
Yeah.
But it was great income, and it was okay at the time. And one of the recruiters back in the day, if you remember, a bank, I guess we won't mention names, but a bank recruiter came in, and he said, I love coming to your store. I drive for an hour just to come to the store. I love your customer service compared to the other stores. And have you ever thought about going into banking? And it's like, no, I don't have banking experience. And then he goes, well, why are you doing this job? And I said, because I moved to the area and, opportunities. And he said, you mentioned you had a son. I think I talk about my son all the time and everything about my son. And he said, what about if I give you a job with no nights and weekends? You don't work nights and weekends, just regular banker hours, right? And again, you go, I don't have the experience, but I'll give it a try. I went, applied, did a test, interviewed, started working as a personal banker back in 2009. And, you get licensed, but through the bank. And then...
So personal banker, this is like the ones that do deposits and open checking accounts? And
correct. Like back in the day, you open checking accounts, deposits, you start handling consumers. But back in the day, the banks had goals. Like you have to get a certain amount of credit cards and mortgage referrals. So I got really good about, calculating the payments and looking for opportunities on the mortgage side. And one of the bankers and mortgage managers at the time, he said, you're really good at this, and you give me the best referrals. Again, I didn't know much about mortgage. He's like, why don't you come to the mortgage side, and I'll help you. I'll train you. I'll teach you. And at that time, I was happy with my now no nights and weekends. But he didn't mention, I'm at the bank, he didn't mention no nights and weekends. But he said, if you come, I'll help you. I'll train you. I'll teach you little by little. And, we were doing really well. He didn't speak Spanish. I speak Spanish. So we started working together, doubling the numbers, production for him, which was great. I was learning, right, hands-on. And one day he said, you're ready? I think you're ready. You have all the training, and I think you're ready to be a loan officer and be on your own. And you're like, no. It's always the unknown, right, and the scary part where it's like, and to live my little paycheck, and now I have to go commission. I'm like, I have a son. I can't do that. He's like, you're great. What's the worst that can happen, right? You can always come back to banking, but for now, I think you're going to do great. You're doing great. And again, it's right after the mortgage crash, but the benefit is I learned how to do everything from helping clients to apply for, your loan modifications, your whatever. Back then, it was whatever it took to make the transaction work. And I took the job, and now it's 2013, and here I am. And now I don't know if I know how to do anything else.
That's funny. What do you think? Like, so I had something similar where like I left high school like in 11th grade. It's not that I wasn't good at school. Like I had good grades. I just didn't want to be in school, and for me, college wasn't the road. For me, like I was lucky where I had an opportunity at a small company, and it was really like old school, like an apprenticeship, right? Because that's how it was done before. You would follow somebody if you wanted to learn how to like put shoes on horses, you would follow around the horse maker until you learn how to do it, and then you would go do it, right? So that's sort of how it's been done, and that's how it was for me. What do you think? Like the differences between like going to college and then doing it like old school, like something like
hands-on learning, kind of like we learn. I mean, it depends, right? College is not for everyone. It's a great education, the system, if that's what you want. I mean, I guess if you want to be a doctor, you can't just go hands-on training and become a doctor, right? But in terms of the work we do, you do insurances, we do loans. It's about learning the business, and I don't think you learn that in a school. You can go to school for real estate or mortgages, but it's more than anything hands-on, reading, learning the products, the programs. If anyone is interested, kind of like I did, I was very fortunate to have a mentor. I think finding the right company, looking for someone that's going to give you the right tools and the training and support to get you to the next step in your career.
Yeah. No, that's very important. I think the education and college it's really important, especially like where we're headed, because the affordability is like, it's crazy right now, and it seems like if
like
you don't
said the word.
if you don't have like that higher level of education and you're not able to bring in a higher income, I think you're gonna have a really hard time, like where we are going, and the people like us, like same thing with me. Like I only know insurance. Like it's a good thing that this insurance thing worked out because I don't have too many. I don't have too many other. I don't have too many other qualifications. Like this is it. This is what I know how to do, and I've been doing it for my whole life. You know. But yeah, I think it's key. Like it's not for everybody. There's few people that can be super specialized and super good. But the education is very important too, because if you don't have the higher level, you're not going to get those higher paying jobs that are around the corner.
Or unless you do really good in sales, right? And makes a decent amount of money. And now with artificial intelligence and everything that's taking over, right? There's many, many ways to get that extra additional income. But I mean, you're right, affordability. It's tough right now in terms of interest rates are at an all-time high. They've been the highest they've been in 20 years. You and I were having this conversation in terms of, mortgage insurance on a home for the mortgage payment, home insurance. You and I think, talk about this 3-4 times a week, where it's like, what happened to, even home insurance or being $68, right? Now it's what? $200-$300 or maybe more, depending on the type of property. Everything. I mean, going to the store and buying basic groceries. It's, even groceries are what, up 40-50%. So
and I think it's gonna get even tougher, because like you mentioned, the insurance. So in insurance, the California Fair Plan, which is before a couple years ago, like people were like, what is that? What is the California Fair Plan? Now almost every new buyer is going into the California Fair Plan. So they were operating in the red, meaning they were losing money. So they were operating at 248%. So that means it cost them $248 to make $100. That's not a sustainable business practice. Like you're just losing. So as of next month, the prices are going to go up. They're not going to go. They're not going to go. But check this out. They're not going to go up 248%. That's what they should be, to be like at the level. So they put a cap on it. It can only double.
Oh, that's it. Just
Yeah.
double them. Let's just increase them another 100%.
Is that crazy? That's December 1st.
It is, but you know what? You brought a great point when you're talking about insurance, right, or anything in general. But I mean, you're an insurance guy, so you're talking to us insurance right now. People, if I'm a regular buyer, I have no idea what you just said, other than can I afford the payment? I can't afford the payment. The behind the scenes, like you're explaining right now, in terms of rates being higher, everything, the cost of living is higher. In terms of insurance, I think what you said right now, it's a great point. People should call you, because it's just more than anything, right? You provide great information, and you're a great advocate for community help and education, because We don't know what's going on when it comes to insurance. We're getting bills. Myself, right? I got my mortgage insurance bill, and it's like, what do you mean it double? Right? It's like, here's your notice. Now your home insurance is double.
Yeah.
And I had no idea.
So back to the affordability. So when you're talking to a customer, what is the process? Like, how do you guide them? Like, okay, you should go this way, or you should do this. What is that conversation like between you and your buyer?
You know, I like to take it. I'm still old school in terms of making the notes or handwriting or putting in the notes. I guess now it's the systems, right? You have the CRMs, which is your database, and notes for technology and everything so advanced. When I started, I used to walk around with a notepad. I still do. It's a habit. If you know me, you know I walk around with a notepad and a pen. But it's doing a full review, right? And with technology now, everybody's going online in terms of comparing rates, right? Home insurance, mortgage rates. You can go online and type in, this is my basic scenario, and these are your rates. But in terms of doing a full analysis of your finances, doing a full review, it's more than that. It's partnering with the right, again, insurance, title, escrow, the different vendors during the mortgage transaction. But more importantly, it's when I meet a client, asking the client, what would it mean to you to purchase a home, right? What's the real reason? What's the why behind it? And secondly, I start backwards. Tell me about your mortgage payment that you're looking to achieve. Reason is, us in the business and as lenders, we go, oh, here's your debt to income, right? Which is your money coming in, this is your mortgage payment, and this is your payments plus monthly liabilities. But we don't ask the basic questions of, hey, Eddie, do you have any kids? Do you do any extra activities? There's more to your expenses, monthly expenses, than just what's on your credit, for me. So when a client or a real estate partner goes, give me the max approval, well, the max approval is different for everyone. If you have a gym membership, even gym memberships, right? I mean, how much are they now? And if you have 2-3 gym memberships, if you have kids and they're in sports, that might be another $300. If you have a baby in daycare, it's been 22 years for me, but that's what, another $1,000 a month that we're not counting for in expenses. So we want to make sure we set the clients for the right home and to be successful homeowners, not just here's a quick transaction and I'm done, right? So doing a full financial review, and sometimes it's telling the client, I know you wanted a 6-bedroom house, but maybe we can start with a 4-bedroom house, but then you're financially set, and I want to be your loan officer for life. So we can do those full mortgage reviews once a year and see where you are, and then potentially at that point, then maybe move you to a different home or whatever the case might be.
So something else that is getting kind of crazy. So I personally have 2 dogs, a Doberman and a Pit Bull. These are not like small 5-pound dogs. They're big dogs. Like, they're almost the size of like a person, right? My Doberman's 100 pounds. So they eat like a person too.
I think the food is more expensive, which is a great point, in vet bills and insurance. So let's just say you have another $1,000 in expenses, right?
It's crazy.
And you're telling me your comfort level and your mortgage payment is $2,000, but I give you a payment of $4,000.
Yeah.
What happens to the extra expenses?
Yeah, my dogs go through like 100 pounds of chicken a month.
Oh, so you feed them
the
nice.
But that stuff isn't cheap too. It keeps on getting more expensive. And I never thought about that. I don't think about I spend the money, but I don't think about that like in my budget. Like, oh, my dogs are a big part of it.
We don't think about that, but again, it's going back to doing a full financial review, in terms of not just type in your application. We get so used to now go online, complete an application. I'll tell you what the numbers are, and we're forgetting the conversation in between part where let's do a full review. Because I want you to be a happy, successful home buyer, right? Even in this market, like you said, even with everything as expensive as it is, if we stay within your means and your budget, there's no problem why you shouldn't be able to buy now. And then in 1 year, you have equity, right? Maybe you can do a move-up purchase, buy something bigger.
What's the feedback that you get from your customers when you do that? Do they like it, or are they like, wait, what is this?
You know what? At first, they're like, "What do you mean?" Or if people call or ask, "What's the rate?" Well, that's an excellent question, right? Thanks for the question. But there's so many factors that are going to impact the rate, not just what's the rate. It's going to be what loan program do you want to do, the credit score you have, the property type. In terms of that, I think clients a little surprised, but then it's good for them, right? It's a little surprised because we forget to ask those questions. Well, I don't think we're asking those questions. It's just, here's an app, complete it online. We'll get you pre-approved in a day. Go buy a home. That's it, right?
Yeah.
It's becoming too transactional, and we forget it's not how many transactions we're closing and how many deals we're closing, right? You see in the industry sometimes, I'm closing 5, 10 deals a month. Well, that's great for you. But if we looked at it as I'm helping 5 families, 10 families a month, it changes everything. Yeah. And it changes the way we do business.
Yeah. So I've noticed from the customers that I've helped you with, like they're all like that. Like you spent time already coaching them.
Because then they want to talk to you and spend 30 minutes on the phone with you.
No, but it's good. It's good because, like you said, it helps you really identify, like, this is an individual. This isn't just like another loan. It's an individual. Everybody's different. Their individual needs are different. It's not a cookie cutter. There are some people that like that. Like, same thing with insurance, right? There's people that like picking up their cell phones and just like on their
And we have that. We have the technology for that. You want to go to my website, complete an app, do everything. Don't ever talk to me. We have the systems and technology in place that you can, upload your documents. And that's the kind of client or maybe a investor, or if you've done this 2-3 times in terms of a buyer, we respect that. We respect what you, the way you want to do this. But again, like you going back, so my clients, if I send you a client to do a full review, then okay, maybe the home insurance in this home might be more expensive. I think that last client you helped, but you have 3 other homes, right? Can we review those insurances, save you some money? So again, your overall expenses a month are lower than just on this transaction. So it's just doing a full review.
You know what I've noticed? Is it the same for you? A lot of the people that are buying houses right now, they're first-time buyers.
Majority is, and even though the reports or the media or social media tells you it's not, it is. 27% of the closed transactions are still first-time home buyers. So they're a big part of the transactions.
Yeah, and also I know it's our industry, it benefits us, but like the Hispanic Latino market, there's a lot of people in that market that like are buying houses.
It is. It's and I think back to your part of NAREP, right? Which is the National Association of Hispanic Real Estate Professionals, yes. Realtors. And you can go online and see the report, right? And in the majority of buyers right now, and it's just not even just Hispanics, but minorities, right? And you can look at the different numbers. So it's a huge market right now. Yeah,
I think they're underestimated because like a lot of the people that I've had the opportunity to work with, they're small business owners. A lot of small business owners.
I think all of our clients right now are, yeah.
Yeah, and they're Hispanic. They're hard workers. They make good money. But like you said earlier, like the education, like they need that, like somebody to help them through the transaction because they don't really know.
Old school, right? Forget the technology. So it's catering and tailoring to every different type of client, like we were talking about in different demographics. Yeah. You have maybe someone that's in their 20s. They don't want to talk to us. Yeah. They wanted me to text them. I have a client right now. It's like, don't call me, text me, right? But then you have, it's such a missed opportunity in I think in our industry right now in terms of real estate and mortgages because we have doing the full review, right? We're doing a transaction right now that is turning into 3 again, right? And it's that same client, Spanish speaker. She's like, I don't know how to use computers. I don't know how to use my phone. Can you help me? Client, we're closing a transaction, and now she's buying 2 more properties because she understands the value of having investment properties and the extra money, the cash flow coming in. But she's not the client that's going to go online and complete an application. she's a client that I think will keep you on the phone for 30 minutes per,
okay.
per quote.
On a Saturday.
On a Saturday, because she works all week. We're available, right? So again, forget when they told me no nights and weekends. that was like, that lasted for like 6 months. We have to be available and work when our clients need us. And that's another thing. You can go, every business is different. You have your insurance or lending that might be available Monday to Friday, 9 to 5. It's different in our side of the world. Yeah. Where if my client, it's off work at 6 and that's the time they have to do a review. But I'd rather do that. I'd rather take a call or a meeting at 6, 7, 8 o'clock at night. But then I know it's a full review, and and sometimes the numbers don't work, right? We might have to put them on a home path where it's not never a no, it's just maybe not a no now, and then we can work on A, B, and C to get you to home ownership.
Yeah, it's a different approach. Like I did this. One of the insurance companies I work with, this was like 10 years ago, maybe a little bit longer. They did like a course, education, right? And the course title was like how to compete with Geico and Progressive and all the online companies, because that was at the time they were like disrupting the insurance market. Just like in real estate, you had the same thing. You had the online disruptors, right? And it was new. So like, how do you compete with Geico and the online companies? So like they packed the room. Like everybody wants to know, okay, like how am I going to compete with Geico, you know? And do you know what the answer was?
Work.
You're not going to compete.
You're not going to compete.
Yeah, you're not going to. Sorry.
Online. Well, I mean, we have our online lenders,
Yeah.
right? You can compete with our, like if you go to Rocket Mortgage or Quicken Loans.
Yeah.
Again, for those clients, you can go online and you can do your own transaction. But if you need a one-on-one.
Yeah, and that was the sort of like the point of the conference. It was like, you're not going to compete with Geico. Like they have billions of dollars to spend on marketing and advertising. You don't have that budget. So what you're going to do is you're going to compete where they cannot compete with you. And the local, like the sit down and the one-to-one and the presence in the community, Geico doesn't have that. So you need to compete there where they cannot compete with you, because you're not going to beat them at the online thing. Like they have too much money. So that makes a big difference.
But are they, like you said, involved in the community, like you and I, doing community events and fundraisers and helping? If you are, like I call myself your community lender, right? I'm a community lender, but you see me out and about. It's not just, hey, I'm in your community. What are we doing to help and improve the community? And that comes from helping small businesses, promoting small businesses to really helping the community. Find something you're passionate about. And really helping maybe a nonprofit, and what are we doing to help and give back to our local community that's giving us a business? Yeah,
no, that's a big deal, because a lot of people, like when they think of like giving back, or these, like they're big gestures, like, oh, I'm going to donate thousands of dollars to X company. Well, that doesn't help your community.
No,
it looks good and you get a nice plaque, and it looks great, but that's not helping the community where you live, which I think is more important. Like when I grew up in La Puente, and it was mostly Hispanic, like probably like 99% Hispanic. And all my friends lived on the same street. We would get home, and the first thing we would do is go play in the street.
The good old days.
But all the moms were stay-at-home moms, and they would watch over each other's kids. So we were raised by the community, not by like mom and dad like in the house playing Xbox. Like we were like the community, So the community like had a big part of like my values, Yeah, and that's so it's getting kind of lost like right now.
Well, now a phone or a tablet can help you with babysitting.
Yeah. So because so many people are like the first time home buyers, what tips or advice or what can you tell them? Like people that are looking to buy a house, or maybe they're not sure if they should buy. What kind of tips would you?
Most of our clients think they're not ready. They don't know about their credit. And again, this is not that in high school, right? We were talking about whether you like school or not, or whether you like college.
Yeah.
They don't teach us how to balance a checkbook. Growing up, they don't teach us how to build your credit or establish credit, right? And that's a part of the system that's failed all of us. In even at home, right? Depending on where you are, depending on how you were brought up and raised, they don't teach you. I mean, I wasn't brought up learning get a credit card, manage your credit. In terms of our home buyers, it's a lot of them, they think they're not buyer ready, and they are. Just doing a full complimentary consultation, and every lender is different. With myself in Gold Star Mortgage company I work for, is we do a soft credit check. If you're familiar with a hard credit check, which is going to impact your credit, or a soft credit check, to know where you are. So we always start with a complimentary review, soft credit check, to see where you are, to see you might be ready. I have clients that say, oh, I'm not ready, or I don't know what my credit is, and they're fine. So number one is checking your credit, looking at your finances, looking at savings, and you don't need a lot of money like people think. You don't need 20% to buy a home. There's so many programs that you can do as little as 3% down payment, 3.5% down payment, and then even in this market, there's a lot of down payment assistance programs. There's some grants, but there's down payment assistance. And just learning to know the difference and navigate. At the end of the day, again, it goes back. Are you comfortable with the payment? Let's see if you're ready, or what you need to do to make you home ready.
So something that I keep hearing a lot about is this buy down thing. Buy down, buy down. What is a buy down?
It's right now what we have is a seller buy down. Okay. So it's a temporary buy down. So the way it works is, if I do an approval for you and you have your real estate agent, you go submit an offer. Right now, the payment, right? Payment shock from going from maybe renting or living with your parents or with a family member to having a mortgage payment. But even then, right? Rents are
skyrocketing.
It's insane. Yeah. So what we can do is to help you until rates improve, which, I don't have a crystal ball. We don't know if the rates, they should improve. Back in May, we don't know if they're going to improve, 3-6 months from now, depending on where the market's going. We ask, or your real estate professional will ask the seller for a credit. Instead of having the seller maybe do so many price reductions on the home they're selling, maybe we can ask for a specific credit to buy down your interest rate. So let's say your interest rate today is at an 8%. But your real estate agent will ask for what's called a 3-2-1 buy down. There's different ones, right? 3-2-1, 2-1, and a 1-0 buy down. So your real estate agent calls me, tells me how much money, it has to be an exact amount, do I need from the seller credit to buy down the rate. Which means for you, the benefit for you is for the first year, the interest rate, if it's at 3-2-1, will be 3% lower than the rate you have today.
3%.
3%. So it's a 3-2-1. So you have the first year.
Huge.
It's huge. It's a huge, and again, it's a seller contribution, so nothing the buyer has to do. So then your payment will be calculated based on a 5% interest rate. So that should
thousands probably.
Depending on what it is, right?
Yeah.
Hundreds of dollars a month. Year two, then it goes up 1% until the end of the term, or you can refinance. The beauty and the benefit is, let's say you refinance in 1 year, and you have enough of that credit set aside, you can use the money towards your refinance. So in essence, it's a no-cost refinance in the future, right? If the rates were to drop lower than what you have.
So it kind of sounds like
it's a win-win.
Yeah, it's a no-brainer.
Well, but a lot of, again, the information, right? So
yeah.
So I see a lot of price reductions right now in the market because the homes might not be selling because of the rates. So if I'm a real estate agent, instead of telling my seller, let's drop the purchase price or the sales price, right, another $50,000 or $25,000, maybe you can offer that as a credit to the buyer. Help the buyer sell your home, and everybody wins.
Nice. So for people that are still okay, now is not the time to buy because of affordability. What would be
it's like,
what did you say?
People that were waiting not to buy because they were waiting for the market to crash.
Yeah.
And they should have bought when the rates were 2% and then 3%. And they lost out on tremendous amount of equity. And people that are saying now, well, I'm going to wait for the rates to drop. Homes are still appreciating, right? Homes, there's no inventory, so there's supply and demand. There's still not enough homes for sale for the demand of people that want to buy a home. I say don't wait. Buy when you're ready. If you wait for the market to be a perfect market for you, that's never going to happen. So what we tell people is buy when you are ready by doing a full financial review, and if the numbers make sense, It's better than paying 100% on a rate on rent.
Yeah, I'll give you an example. So at the beginning of COVID, what you heard in the news was like, oh, there's going to be a real estate crash and all this stuff, right? This was 3 years ago,
3 years ago.
3 years ago. That's what you were hearing 3 years ago. I had a Lennar house, so my taxes were huge, like because it was a brand new house, you know. So taxes were high, and I'm hearing it's going to crash. My tax rate had gone up, so my taxes were going to be almost $1,300 a month, just taxes, 1,300. So my mortgage was going to go up to like over $4,000. I'm like, oh hell no! I'm not paying $4,000 a month to live in a tract house.
Yeah.
You know, like no way. Like sell it. And my plan was, okay, I don't mind paying $4,000, but not for a tract house. Like if I'm gonna pay
Makes
$4,000,
sense,
but like un ranchito or something like that. You know, like I'm okay with paying $4,000 for that. Not okay with paying $4,000. Like. So my plan was I'm going to sell it, then the market's going to crash, and then I'll buy my rancho.
You were one of those. The market's going to crash.
Yeah, like now I can't buy a tract house for like a payment under $6,000. So I'm one of those who like I'm on the sidelines. Like, what do? Do I buy another house and have a $6,000 mortgage? Like how we were talking about, like Texas, right? Like, do I wait? Like, what do I do? And it's tough, but I think the important part is the affordability, right? Like you said, if you don't own a house, it's not going to get cheaper. Like you have to
rent.
You have to buy one. And aside from like owning your home and being able to do whatever you want in your home, the tax benefit.
And aside from that, it's, I think, for me personally, right? Everybody has their different opinions on home ownership. Because I'm a single mom. I've been a single mom. And for me, buying my first home was... the stability, aside from everything, the financial stability of moving and renting, but the stability and providing, creating memories, right? So that's why it's like, what's important to you? What would it mean for you to own a home? For you, it's like you want the ranch, you want the horses. Everybody has a different why. For me, was giving my son a safe place. You look at the good school districts, you look at whatever the case might be. And more than anything, it's being the provider and that was my first home, right? And even me and being in the industry, I was terrified to buy my first home. Because it's like, I'm paying this for rent, this is what I'm going to pay, but I know the numbers make sense, right? It's just telling yourself no. And now we bought a home, we didn't like the area. And again, you can't do that when you're renting. I mean, you can, right? You can move. The flexibility of renting is you can move whenever you want, and depending on your lease. But it's like, we didn't like the area, sold the home, grabbed the money, bought another home, and then took that money, bought another home, which is out of state in Texas, right? And then now I'm getting to, again, get money from that home to buy another investment property. And now that I look back, it's like, why didn't I do this 10 years sooner, right? But again, I didn't have the guidance, and I didn't have somebody telling me, yes, you can, and this is what you can do. So
it opened the doors for you to become an investor.
Yes, but you don't realize, right? You're becoming an investor, and now it's like you look back and you're like, I didn't think I was going to have 3 properties. And now looking back, it's like, if something was to happen to me, that's the goal, right? Then my son gets properties. He's learning the same, right? How to do that. I'm teaching him. He bought his home last year.
21 years old.
Mm-hmm. And now he's thinking of, we're working on second home, but it's like that was a year ago. And again, the rates are higher, but again, life changes sometimes where you have to refinance. Rates are high, but there's so much equity in the homes. Take the equity, use the money to maybe, if you are already a homeowner, pay off your debt. Do a full review, pay off debt, purchase another home. Maybe buy 1 or 2 investment properties and have extra money coming in. Because right now everybody is house poor and equity rich. So do a full review and you take advantage of your equity.
Yeah. So you said this a couple of times already, and I think it's really key, like the mentor part of it. When I first started in my insurance career, my goal was $500. That's how much I wanted to make, $500. Because in my mind, that was like just a little bit above minimum wage. Mm-hmm. So I'm like, okay, if I'm making $500, like I'm doing good.
You're doing good, yeah.
And then $500 was like okay, no, like then it's the next step and then the next step. But at the beginning, my goal was I wanted to make just above minimum wage.
You're not aging yourself, but you're saying the $500 was way more than minimum wage. But that tells you how long Eddie's been in the industry.
But that was my goal. And then I started to get around other people, and then my goals changed. When I left the company I was working at, this was back in like 04. I worked there this was like 05, something like that. My goal at the time was $500 a day. Like if I came to work and I didn't make $500, like it was a complete waste of my time. but my circle had changed. Like now, my friends were business owners, like they were investors. It was a different circle of mentors compared to when I first started, and I didn't know anything. So just like the circle, the mentors that I had, like totally changed. My outlook changed, and now you start looking at things different. Like me personally, like everywhere I go, I look for, can I invest in that?
How can I make money on that?
Yeah.
It's like those numbers don't make sense.
Yeah, like how can I make money on that? Like, is there a way for me to make money on that? Like I have a friend that he has a towing company. And I was invited to Guadalupe a couple of weeks ago, and I'm sitting there looking at TikToks, and this guy's talking about like trucking. And so I call my friend, he's like, hey, can I buy another truck? And then you work it? Like I'll pay for it, but you work it, and then you give me my cut. He's like, well, yeah, let's do it. Just like the whole mindset changed with different like mentors, you know?
It does. And like I said, I was very fortunate with mine, because now you look back and it's like they told you go online and take a course, right? Or go take care of this. So finding the right mentor, but also be willing to work, be willing to change, be willing to adapt. And I'm going through that right now. I was a Gold Star. I took a little break from Gold Star. I'm back. You have to go experience the world, live and learn. And when being here, you have to find your place. And for me, this is my home, and this is the best place possible, just because I get told what I don't like. So I get pushed every day, if that makes sense, in a good way, where like, not in a bad way, but we have the managers and the ownership where it's like, you're doing this, but you should be doing this. And what happened? So the accountability that I get, and it doesn't feel pretty and nice sometimes, right? Because there's days I'm a little lazy, and it's a business where you have to motivate yourself and keep going. And there's days you don't want to work. Yeah. But then you realize you're not doing it for yourself, you're doing it for the team and for the clients you're helping. But it's just finding your work family. Yeah. Someone that you can 100% trust, and 100% gives you the constructive criticism that you need, but you have to be able to take it too, right?
Yeah, the tough love, the kick in the butt.
Which it hurts. You're like, ooh, did you just tell me that? Did you just call me that? But it's true. And I go through that sometimes, right? Where you go like a week or two and you're like, ooh, that one really hurt. But it's true.
So my first boss, who now he's like one of my best friends. Mm-hmm. He's a little bit older than me, but he's one of my best friends now. He told me a long time ago, he's like, we were talking about owning a business and all that stuff, right? So he tells me, Eddie, we were talking about passing on his company to me. So I'll take over his company and work out payments, So he's like, Eddie, if I do this for you and I come visit you on a Tuesday and you're playing golf, like,
we're going to have a problem.
We're going to have a problem.
Yeah.
Or if I come and I see that there's a Ferrari parked in front, we're going to have a problem. Like, you do what I do, like you work your ass off for 10, 15, 20 years, and you'll be good the rest of your life. Like, but if I come and you're playing golf, like, we're going to have a problem. And I never learned how to play golf. Like,
you're like, I'm not even going to go.
Yeah.
Yeah.
But I needed that. Like, I needed because when you start making money, the first thing you think about is like distractions.
It's easy, especially now with social media.
Yeah.
It's super easy to be like, I'm going to click this, and it's 30 minutes later, right? You're looking at a video on how to talk to a giraffe. I don't know. It's just it's different. So you have to stay focused and structure, and we're in sales. Yeah. That's impossible for us. That's hard.
So funny story. I took all the social media off my phone. Like, I don't have it no more. I do have it, but
only when you check.
Yeah, it's on my iPad. So on my phone, I don't get FaceTime or Facebook alerts, or like I don't even check it during the day. Like it's like after hours. It's not like during the
Which
day.
is great and it's huge. I have it, but my alerts are off because it's easy to be like, oh, somebody messaged me. Let me read this, right? And then, like you said, it's 3 hours later.
Yeah.
And it's a distraction that you have control and can prevent.
Yeah.
And then again, going back, and I'm going, I guess, through a personal also rebuilding right now, which is painful. In a good way, right? Because it's like you're learning what the bad habits you learn and what you're doing wrong to undo that, and it's not pretty.
Yeah.
It's like when you have to look at yourself in the mirror in the morning and you're like, I need to do better for myself and I need to be better. And then,
But you're pretty disciplined. Like you're at the gym every morning, like from what I can see.
almost every morning. There's days I don't want to get up. So yeah, I go cycle at 5 in the morning. So I get up at 4, cycle at 5, and then a couple of days a week I do a double workout, so like strength or weights right after at 6 o'clock.
That's not easy. That's hard.
It's really hard, but you know what? And I haven't been doing it for that long, but it's like, what was my other option? Be stressed, sat at home, and it can go the other way, and that's where I was before, right? Where you need to change and you need to change.
Yeah.
I wasn't happy with what I was feeling, and when you work in an industry when it's just rapid pace and can be stressful, you just keep going down that bad, daily habits. So now it's the opposite. If I don't get up, I don't need an alarm, and if I'm not up by 4, you're like, my day is not the same.
Yeah.
So you do that, come home, and you're ready to work by, 8 in the morning. But then it's 8 in the morning for us. It's already 10 Central, 11, so we're behind other cities, states. So it just depends on how you look at it. I still work all day, but it's better work habits, I guess, in terms of building. Like if I'm going to work for 2 hours on doing this, then you work on that instead of just barely working all day. Yeah.
So, a big part of both of our business, right, is referral and referral partners. And one of your biggest referral partners are realtors. So, how do you manage the relationship with the realtors, and because you want your partner to be successful too? So, how do you manage that relationship? What do you do with them, just to make sure that the whole experience with the realtor, the whole team, that it's successful and you help the customer?
Again, you go back to customer, right? But as a partner, it's a partnership. It's not just a one-way street, and it has to be equally the same during the transaction to accomplish the goal of closing the deal. Aside from that, I think with my real estate partners is looking in setting up one-on-one meetings and calls to make sure we align in where you are in terms of your goals. I had a meeting with a realtor. It was actually nice. It was at a winery. It was a little break / meeting. But it's a meeting of asking her, how much money do you want to make? And if you don't have a clear goal, and she's like, I don't know. And, that was the first meeting. Second meeting, it's like, how much money do you want to make this year? $140,000. Okay. What's your average pay per transaction? Then this is how many loans you need, how many calls. And I guess holding them accountable, especially if they're not part of a team where they don't have, like you said, the structure, the mentorship. It's you have to motivate yourself and helping them with the tools. We have, again, depending on the realtor, technology is huge right now. And we have the apps, we have the tools, resources where you can send a client, track, monitor the client. So it's less work, right? We have the database, we have the CRMs, we can monitor their client activity to help them better prepare, help them manage their pipeline and their database a little bit better. But aside from that, it's just helping them have a business plan.
How's that? How did that conversation go? Because you're giving them the tough love and the kick in the ass that they needed. Like how do they receive that?
It's not good, I guess, unless they're business owners, right? Because we're business owners. We in just getting a real estate agent or getting your real estate license, that's not it, right? It's not. You don't get it because you want to be off 7 hours of the day, or I don't know, maybe you might. But if you want to make it this a business, you have to still get up, go to work, help your clients, call, visit builders, visit home, whatever your business plan is. But I think breaking it down with the real estate agent, the same as you're breaking it with the client and asking them what's the income you want to make. And then breaking it down in terms of then you need this many leads, this many clients, this many prospects. How can we help you get there? Finding those right partners and accountability calls. It's a partnership and it's a lot of work.
Yeah. So I did something like that at the beginning of the year. I was at a real estate office and I asked the room, like, how much money do you guys want to make? So I heard like, 60,000 or 80,000, 200,000, different answers, right? Mm-hmm. And so somebody yelled out 200,000. So I picked on them, I'm like, okay, how are you going to do that? And they didn't have an answer, they want to make that much money. There's no plan, like you said. So then I started breaking it down for them, and like, okay, this is a strategy, right? It's very simple. We didn't get into details, just a simple strategy. And I'm like, look, guys, if you guys need help, like, I'm willing to help you. Let's do it, So that particular real estate office, I guess they didn't take it so well because they never invited me back to speak again.
Well, and it's so the same. If you're a new or team or whatever real estate agent, and you call me right now and say I want to be able to get leads because we have a lead system, but again, it's a lead, right? So as a real estate agent, I can give you the leads. That I can help you. I can partner with you. There's many different ways we can generate the business or the leads, but then after that, you have to work. We have to work, right? You have to, again, have your business plan. So if you're a real estate agent and you have a team and you want to call us and tell us how can we structure this, or now I guess it's not even in person, it's a Zoom call. Yeah. Can we schedule a Zoom call in terms of the technology, the different loan programs, right? Like you were saying at the beginning of this is learning the different loan programs available for different, depending on your niche. And maybe expanding on what you're doing right now, we can help you with all that, but then you still have to do the work.
Yeah. So I think that's a couple of key takeaways. I think that's why we worked so well together. We have the same values. Like the community is important, and the relationships part of it. I prefer I value the relationships a lot more than most people, and sometimes. And this is just me, I rather lose money. I rather lose money than to lose a relationship. Because you never know, down the road, where that relationship will take you. What doors they might open or vice versa, where it's going to take you. So I value that a lot with my referral partners, the relationship, And lunches or coffee, I do that whenever I get a chance, just because you never know what idea will come from it or opportunity or stuff like that. What do you think?
No, I mean, I think you have great points, but it's like bringing value. Like you said, you're not just going to walk around and be like, hey, I'm going to buy you lunch. It has to be strategic, right? Yeah. And it has to be what value can we bring to each other's business and how can we help each other grow and help our clients? Can I send you my clients for a complimentary referral, right? Or a complimentary review, and that's what you're working with in terms of the community and everything. Again, and it's a personal connection. Because if you want to call me and you tell me, Erika, I want access to all the systems and everything else, but then that's it.
Yeah.
And you lose the connection and the accountability because I'm looking for partnerships. I'm not looking for just a referral source. Yeah. I mean, it's good, right? Realtors in the industry, we say they're referral sources, but it's when it's a partnership, it becomes better.
Different. So something that I always brag about you, but you've never heard me say it.
This is being recorded, so hold on.
No, the client reviews that you do, not everybody does those. Because sometimes you send me a client and it doesn't always work out where we help them, but it's still a connection, So sometimes you send me stuff and I'm like how the heck did she get that? that, Mm-hmm. And it's because of the reviews that you do. It's not easy. It's hard and it takes a lot of time, But the reviews that you do, like, it's like a gold mine, but it's a lot of work.
Well, look at our first-time buyer find a primary and 2 investment properties.
Yeah.
All at the same time. It's possible.
Yeah.
It's just doing what's right for the client.
And then it also leads for more business to, because a lot of times the referral partner, the realtor, didn't do that digging, so you're sending business back to the realtor. Like, hey, he's ready, go call your realtor, you know?
Which is what we try to do. It's not always, like you said, a one-on-one, but it's like trying to find, when we have a client without a real estate partner, how do we partner them with, now that you did a full review, how do we send them back and partner them with the agent that we feel is going to help them or better service them?
Yeah, and it's with everybody. Like, you have a little network. You have the credit repair. You have, like Tiffany, you know. You have everybody. Like, you have a little network, and then you're good at, like, identifying, like, how to help the customer.
Because then if we help them, then we earn the right to ask for a referral.
Yeah.
So who else do you know that we can help? And that's how we build our business.
Yeah, that's awesome. Erika, is there anything else you want to share with us?
I think we cover everything other than don't let social media, I guess, get off your phone, right? Discourage you from being a homeowner, or it's, like you said, it's tough right now,
Yeah.
but it's possible.
Yeah.
We have to work a little harder. And if you're a real estate agent or any professional in the industry, right, you can reach out to us and we can mastermind and come up with different ideas to generate business. And if you're a consumer, if you're a client, just get a full review. And right now might be the best time to buy because the rates are 8%, but right now you might be making more money than you ever made before, right?
Yeah.
Like you're saying?
Yeah.
Compared to who knows what the future is going to hold.
Yeah, and with the full review, like, education is never bad. Like, it's always good.
If anything, you learn and you plan for next year or the year after.
Yeah. So, okay. Thank you, Erika, for your time.
No, thank you for having me. Thank you for the invite, and this was great.
All right. Thank you, guys.
Thank you.
It's a wrap.